After analyzing every single AMD earnings event over the past 2.5 decades going back to 2000, here's what usually happens after earnings. Yes, simply buying the day before earnings, gambling on a good report and selling 30 days later, you're up like 48 times on your money. 100K into nearly 5 mil. Pretty good. Now, it's basically a coin flip, and that should be expected. You're just gambling on a good report or not, but you'll see your best instances are much better than your worst, and an average win of over 20% with an average loss of minus 11%. You can see where the returns really start to compound here. Things got pretty dicey in 2008, 2012. A drawdown of almost 80% on your money. So keep that in mind. You would have had to stomach an 80% drawdown from the peak of your account. You watched a portfolio value of 100,000 go down to 20,000. And after all of that, you still outperform the market by over 4,000%. Always good to use the data that's right in front of you. Now, this is insane. If you were to, instead of just gambling on the day before earnings and holding for 30 days, buy AMD 30 days before earnings, anticipating a good report, you'd be down 30%. That's over 25 years. Yes, you're winning more than you're losing, but your losses outweigh your wins, which is pretty insane when you look at a chart of AMD and see that it's basically vertical. There was a max drawdown of over 90% on your money. The risk metrics are not great here. So for whatever reason, AMD tends to perform really, really well post-earnings event and extremely poorly 30 days leading up to the earnings report. The difference is literally a 48x on your money. You're losing 30%. At least that's what history's told us about the last 26 years of data on AMD. If you want to start using the data to start winning yourself, then check out the link in the description. Good luck.